Hi everybody, and welcome to new video, this time from the World Gold Council. I'm going to read an article about the past year 2024. I'm going to be exactly speaking about gold demand trends. So let's go. Yes. All right. In 2024, gold demand hit a new record. Remember, this article is from 5 February of 2025. Total gold demand rose 1% in Q4 to a total annual record of almost 5 tons. Central banks continue to hoover up gold at an eye-watering pace. Buying exceeded 1,000 tons for the third year in a row, accelerating to 333 tons in Q4. Annual investment reached a 4-year high of 1,180 tons, which is a 25% rise. Gold ETFs had a sizable impact. 2024 marked the first year since 2020 in which holdings were essentially unchanged, in contrast to the heavy outflows of the prior 3 years. Full year bar and coin demand was in line with 2023 at 1,186 tons. The composition shifted as bar investment grew and coin buying reduced. Annual technology demand was also additive to the global total. It grew by 21 tons, which is a 7% in 2024, largely driven by continued growth in AI adoption. Gold jewelry was the clear outlier. Annual consumption dropped 11% to 1,877 tons, as consumers could only afford to buy in lower quantities. Nonetheless, spend on gold jewelry jumped to 9% to 144 billion US dollars, which is still giant numbers. Let's see. Highlights. The London Bullion Metal Association gold price reached 14-year record highs during 2024. The average Q4 price of $2,663 per ounce was also a record and yielded an annual average price of $2,386 per ounce, which is a 23% rise of the price. Demand in value terms reached previously unseen levels. The combination of record gold prices and volumes produced a Q4 value of 111 billion. This took 224 over the line to reach the highest ever annual value of 382 billions, which is again gigantic numbers, enormous numbers. Total gold supply inched up 1% year to year to almost 5 tons, a high for our data series. Growth in both mine production and recycling contributed to the increase in total supply of gold. A sharp slowdown in Q4 over-the-counter investment led to a slight annual decline. Demand from high net worth investors remained healthy, but contrasted with profit-taking in some areas of over-the-counter investment. 225 full-year outlook. Central banks and ETF investors likely to drive demand, with economic uncertainty supporting gold's role as a risk hedge, but on the flip side, keeping pressure on jewelry. So in this chart, we can see the gold demand at record levels for Q4 and the full year. The quarterly gold demand in volume, tons, and value in United States dollars, billion dollars. So we have here the years, we have the tons of gold demand, and the value in United States dollars. So from the year 2000, we have 883 tons of demand, right? And right now, the demand has rose in 300 tons. But let's say this is the yearly demand. So each year, the demand keeps making the United States accumulate this gold, right? So we can see here the surge or the rise of the price of the value, which has been negative from 2012 to 2015, but then it has kept going up to a total value. I'm not sure what this RHS symbol is. It refers to the total value. So it just skyrocketed, you know. So also did all the tons expected. So yes, gold demand has skyrocketed due to all the technology improvements that drive this demand to the sky. I mean, gold, it's also used in technology areas for components and electricity, so it makes sense. But so we're looking at let's say a financial product that is not only a risk hedge, but also a industrial metal, right? So this is why gold here is gonna take a very, very special and important role in the global economy in the forthcoming years. This is why I'm reading this article, right? We have to learn. Gold supply and demand. We have here 2023, 2024, the annual change, the last 3 months of the year in 2023, 2024, and the quarterly year-to-year change. So we have here the supply from mining productions, net producer hedgings, and recycled gold. Excuse me, somebody's writing to me right now. Yes. Mine production, net producer hedging, and recycled gold. Right? We can see there's not really a great difference, only in the net producer hedging. The recycled gold also went upwards. So that's the supply. Supply has grown a little bit, but not much. Okay, this supply. And then we come to demand. Whoa, you can see demand: jewelry fabrication, jewelry consumption, jewelry inventory, technology, electronics, all industrial, dentistry, investment, total barren coin, bars, official coins, medals and imitation coins, ETFs and similar products, central banks and other institutions, gold demand, over the counter another, and the total demand. So we can see here different concepts on demand in tons. We can see jewelry consumption went down, inventory went up, technology went up, electronics went up, other industrial went down, dentistry went down, investment went up, total bar and coin was going down, bars went up, metals or imitations went up, ETFs and similar products, though it's negative, but it was still going up. Central banks and other institutions, this is strange, they soared by 6 tons the demand. So we can see the gold demand and the total demand, and I would say it hasn't changed much, but we can see with this data here also the London Bullion Metal Association gold price with the United States dollars per ounce price. We can see the differences between the supply, the demand, which is stick together, and we can see the quarterly changes of these different concepts. That investment gold made a huge change. Also imitation coins, and central banks and other institutions also made a big quarterly change in their demand, right? Next, outlook. We expect central banks to stay in the driving seat and gold ETF investors to join the fray. Jewelry demand will remain under pressure, and we may see further growth in recycling. Mine supply is expected to remain robust, of course. Let's see. The following developments are likely in the 4 gold regions. United States. A soft landing in the United States with intermittent risks of overheating. Interest rates recede slowly, but it's a bumpy ride. United States dollar on course to decline. European growth remains weak, but benefits from both low inflation and rates in the latter half of the year. Any additional pickup in Chinese growth can provide a welcome boost to exports. China continues to battle with domestic activity, but could improve on continued stimulus measures that have seen a nascent recovery in retail and property sales. India sees slowest growth in 4 years, albeit higher than most regions, accompanied by a welcome decline in interest rates and inflation. Oh, and I should log in or register to keep reading, but this essentially is the simple resume of the outlooks. So I hope you found this video interesting. I'm trying to track more and more gold prices because I've just understood how important it is to comprehend the mechanisms that underlie in the money creation and the gold as a value store. So maybe soon I'm gonna post another video speaking about other issue of gold, probably from goldsilver.com. But hey, these articles from the World Gold Council was cool. I hope you like, and I hope you're taking care over there. See you soon.